Personally, I was saved by gold, oil and a huge upturn in frontline stocks. The markets, Nasdaq and Dow Jones, however, had a bad week. You're listening to the StockInvest.us podcast Trading Tips with Jim, where we are partially right, partially wrong, but still your favorite podcast. Remember to like, remember to subscribe. We are heading for week 3, and this week will be all about the inflation. Last week it was about job numbers, and job numbers came in hotter than expected. Unemployment rate fell from 4.2 to 4.1, and everyone seems to agree that Fed will not reduce the interest rates as much as previously expected. And that made for a week where Nasdaq fell 2.34% to 19,162, testing the support at 19,000 points. Dow Jones didn't manage to have a good week either, down 1.86% for Dow Jones, or 794 points to 41,938 points, just under 42,000 points. By the way, why do I mention the points? Because these are round numbers. Nasdaq being under 42,000 points simply just means that 42,000 becomes, instead of a support level like it was last week, now becomes a resistance level. And if Nasdaq's break down below 19,000, you can just expect it to continue downwards. I told you last week that buy signals were very low, and it was a higher chance of an upturn than a downturn. But the job numbers which came in during the week made for a red week. And if we look at the signals, they are even lower this week, meaning that it's even higher chance than last week for a upturn in the market. At the same time, there is a major sell signals in Nasdaq right now from the relation between the long and the short-term moving average. I started the podcast by saying that my week was saved by gold, oil and a huge upturn in frontline stocks. And I know a few of you would like to know more about my personal investments and how I do it, and sometimes I do share. I personally, as I said, I believe in all these geopolitical issues causing a crisis on energy, which should push inflation up. So that's been my general standpoint. Based on this, I chose last year to go more heavily into dividend stocks, and among these are a lot of Norwegian stocks. I personally are into frontline TGS, former PGS was PGS merged with TGS, and Petrogeo Service was one of the absolutely best buys over years. I think I did a 10 time in PGS stocks, so that was a good buy. Bought them when they were really cheap, and later they merged with TGS. I am also in Agas 2020 oil, and I believe there should be one more. Anyway, these are oil and gas carriers, and they had a fantastic week last week, especially Frontline, which was heavily bombarded, had a very, very beautiful week, strong, solid week, made for a huge upturn, and having a huge part of my stocks. As you know, I only 30% of my investments are into stocks, because I really do not think the market is the best right now. And from these 30%, major parts were actually in the good stocks, and had, especially Frontline, made very, very good. Frontline is registered, by the way, in Norway, but also tradable at Nasdaq, and it was a good, as I said, a good week for Frontline. Been a good period lately. Heavy dividend payer is it also, which is even better, and more dividends actually came into my account. I believe this thing will continue at least for the first half of the year, so I will still stay in the dividend stocks. Another thing that went very well for me was gold. Gold was up by $2.5 $77 up to $2,717, getting close to the all-time high, which was just under 2,800 if I remember correctly. So again, gold is pushing way higher, and on top of this, my investments are in a lot of it is in dollars, of course. And dollars getting strong against the euro, living in a euro country, made for even better upturn. Oil, which I mentioned, by the way, was also up 3.27% last week, ending the week at $76.50 for the oil, which of course drove oil stocks to have a generally good week. But not everything went okay, because the bet into NIO, for instance, is just continuing down. I will get back to that at the end of the podcast. Those following know that I like EV. I think it's a huge upturn coming into EV. I even mentioned Tesla last week. I think Tesla is at a very good place, and that it should have an upturn. Now it's even better than last week. It is absolutely oversold on the relative strength index. Everything is indicating in the chart from all my experience that Tesla should have a fair chance of a green week. I am in a few EV stocks. Main post is in NIO. I'm in NIO in the $1,000 challenge, where I try to grow $1,000 as fast as I can, but also personally in much higher volume than $1,000. I took a beating in my NIO investments last week as NIO fell more than 10%. So it was not all good, but being diversified, my week ended in green, thanks mainly to gold and oil, and of course a huge portion into the frontline stocks, which I thought were undervalued when I bought a huge part of it around 160 Norwegian kroner. Among other things I also invest in, as I said, I only have 30% into stocks. I invest into crypto. Crypto had a somewhat slow week, nothing special last week, a bit up and down. I am also into peer-to-peer lending. That is more and more steady. What worries is the amount of credit card debt, which is piling up. And let's quickly look at the week ahead of us and what I think, before I will give you a few stock tips and get to the $1,000 challenge. And if you're listening and you still like what you hear, remember, subscribe and like to make sure that the podcast can continue. And to all of you which week after week follow me and post nice comments on YouTube and Spotify, thank you a lot. I really appreciate it, and I'm very happy that many of you are able actually to generate some better results just by listening to the podcast. That was the intention by the podcast all the time, to try you help grow your portfolio by increasing your gains, reducing your losses. The week ahead of us, as I said, will be about consumer price index numbers, about inflation in all the forms and shapes that we can read about inflation. Last week was about unemployment rate. And let me just quickly mention a few things about unemployment rate. You have to look at how it's distributed. The borrowing of money continues at such an insane pace. Government is growing while the private are struggling more and more. Both Norway and US, I read an article about Norway, had the highest numbers of bankruptcies in a very long time, and the exact same thing happened in US last week. So bankruptcies among private businesses are increasing at very rapid pace. The huge energy cost, I just said that I made a lot of money on oil, and that has been a trend over many months now, and that led me to believe that the increase in energy cost will keep high pressure on prices, meaning that prices are not going anywhere away soon. Last week, everyone was focusing on job numbers. Job numbers came in strong, indicating a somewhat good economy. And if it's a good economy, Fed cannot simply just lower the interest rates. Low interest rates are good for the stock market because money move away from secure things like interest rates into stocks. Money always tries to go where they can get the highest return. So there is a correlation between low interest rates and upturns in the market. If interest rates go up, usually stock market go down. So that was the reason why markets were struggling last week. This week people will shift and they will look at consumer price index numbers, which will come on Wednesday. We will see the number for December, which is expected to be 2.9% growth in inflation. And year over year expected to be 3.3, which is far above the 2% target that Fed has for the inflation. Everyone believes that Fed eventually will change the inflation target from 2 to 3%. A lot of people argue for that. And anyone that understands the size of the US debt and many other countries, not only US, understand that maybe the best thing for the economy is to let inflation run to eat up more of the size of the debt. We will just have to see. This week we will know a lot for sure. Starting already tomorrow, where producer price index numbers, the cost for the producer, will come, expected to increase by 0.3 for December and 3% year over year. And as I said, on Wednesday we go to consumer price index numbers. So first we start with the producers, how much did their prices increase. Then we will go to the consumer on Wednesday. It will be followed by a few other items, of course. If these numbers come up higher than expected, let's say that CPI for December comes in not at 2.9 but 3.1, 3.2 or 3.3 for December, and annually come in at 3.5, just expect market to tank. We can actually have the situation where markets will fall more than 3% in a day. Having the market at a very low end, close to oversold on the relative strength index for Nasdaq, means that if numbers come in at target or better, you can have the opposite. You can see a 3% upturn. And the buy and the sell signals, which I mentioned in most podcasts, they are also very low, saying the same thing, that we are in for a very, very volatile week. It will be a week where it either goes very well or very bad. I don't think it will be a week where we end more or less where we started by the end of the week. No matter what, it will be up and down. And you have Tuesday, you have Wednesday, especially Wednesday. On Thursday there will be more jobless numbers. We will have a little bit about consumer spending, so the behavior is changing among the consumers. But wherever I go, whoever I speak with, all say the same, that prices seems to have risen very much lately, especially in the food industry, restaurants, etc. It seems just like prices have exploded over the last few months. Will this show in this week's numbers? Are we heading for a minor shock, which will argue actually for Fed to rethink from cutting to increasing interest rates? It will be one of the most exciting weeks for me personally, because I told you I do not think we are done with inflation. I do not think we are done with interest rates at all. I go opposite for the market. I was betting on rise in interest rates. And if you follow me over these 5 years, you heard me last time before it happened. I said I think interest rates will go sky high together with inflation. I was lucky it did. Will it be the same now? This week we will get a lot of answers. Personally, of course, I hope that everything is smoothing out, so we can have good economic times and we can have growth and we all can share good weeks one after the other. Anyway, and this will be the first tip of the week. Do not so much base your investments on hopes. Try to be a little realist. Yes, you will have to cut the expectations for your fantastic growth, not get a 10 gainer or a 1000 gainer, hit the 1 penny stock that will bring you to heaven. If you are a little realist, it will turn out in the long term to save you a lot of money, and it accumulates over time. I've tried over all these podcasts to tell you about how much I'm into the stocks, percent-wise. And in period, I've been very, very high, and periods have been very, very low. It's just how I try to manage what I consider to be the major risks moving forward. One of the risks which for sure still is there is what is happening in Middle East and Ukraine. These are big geopolitical questions. We are still more than a week away from presidential change. And if the week was not to be volatile due to economic numbers, look all the things that was pushed by current president last week about banning oil drilling here and there and other rules and regulation. This will just continue, and it may be a last effort, in my opinion, for neocons to try to provoke even more geopolitical hammock. So I will not be surprised if we see strange things over the week. And the new administration will have to work very hard with whatever comes up, because there is things that still can take everything off course. We're still in a very tense geopolitical situation, and no matter what, if something really bad happens, markets will be shocked. The high inflation, as I said, why I believe inflation will go up is because of this geopolitical tension, wars in Europe. We have the continuous upbuilding on confrontation against China. Some will argue that you will have to take this confrontation sooner or later. I will not get too deep into politics, but all of this creates uncertainty, and in uncertain times, what do you invest into in uncertain times? Gold. That was why I went into gold when gold was 1,600, because I believed 4 years ago that there would be huge geopolitical tension. It was such a right move, and I think still we are at a level where there is a huge upside in gold, not as much as it was before, but still is the very, very short-term thing that seems to be in the wind right now is oil, energy in general. It doesn't only be oil, but gas and electricity. So maybe you should consider to look for stocks which are into the energy sector. There should be an upturn. Quickly about buy and sell signals last week across all boards was 24% buy signals. As I said, it's not very low, but we are getting close to levels where we can see things. This week it's down at 18. Nasdaq is down from 15 to 9, and the lowest I ever seen Nasdaq before having a huge upturn was 7. But at 9, and I'll remind you about this, there is this level where things can go really fast down. So we are at the level where absolutely things can change very, very fast. Just reeks volatility. Volatility is where you can make your huge money if you're able to predict the direction of the volatility. There are indexes betting on volatility by itself. There is many ways to make money, but if you're able sort through all the information, come up with a conclusion, what way will the tiles fall, the dices roll, which direction will they go, you can be in for a major gain, in my opinion, this week. Options, play the right options, and you can skyrocket to heaven. But come again, never play with money you cannot lose, because this is the place where money easily are lost. And that is one of the things you should avoid, because you should reduce your losses. So personally, if you are to try bet hard on the week, I would only do it with a high risk money. Other than that, I would think passively. You may say, well, you will never grow anything if you are just passive. You have to take the risks. Yes, you can take the risk, but do it with a less portion of your portfolio. Greed, which I started this podcast, Greed and Fear, was the very, very first podcast where I explained these two simple driving forces. Greed is the one thing that can really ruin your fortunes. Fear, the same thing. FOMO, fear of missing out. It's can do the same, or fear in general can do the same. You have to try. The best place is actually to be somewhere in the middle between these two driving forces. Use them to your advantages. Right now the fear seems to be on a higher up end, as New York Stock Exchange is down from 20% buy signals to 14. London continues at 15, also down from 18 last week, and Frankfurt is down at 21. Tokyo is still somewhat up, 28% for Tokyo, but down. It was 34% last week. Shenzhen remains the same at 7, while National Stock Exchange of India is falling from 31 to 11% buy signals. If we sum this up, the buy signals are very short, they are low, reduced quite much, indicating fear. And what happens when there is too few buy signals is it flips, and you start to get an upturn again. It's the same thing. If the buy signals are way too high, it's too many buys, you start to flip to sell. You cannot pinpoint exactly where it is, but again, very, very high chance. And my personal system for trying to detect bottoms and tops in the market are flashing buy signals, even flashing for the financial sector, which has been very, very strong or overbought for a long time. Even in that sector, flashing short-term buy signals. And during the week you will have JP Morgan, Wells Fargo for instance will come on Wednesday with their quarter results number, and you will have Morgan Stanley on Thursday, Bank of America as well on Thursday. Will it be a upturn also in the stock price for these companies? They will be some of the first in a new round of quarter results coming up. Other stocks which are coming with quarter results is BlackRock, will come on Wednesday, and Taiwan Semiconductor, which probably many of you will have an eye on Thursday, representing of course AI and new tech, which had fantastic 2024, not started the year the best this year. Citizen Group will, by the way, be on Friday. These are the short-term facts as I see it. I will round up. Market. Nasdaq, if you look at the chart, last week also flagging a higher chance of upturn and downturn. Now it is pushing down. I just said that it was a huge buy. There is a major buy signal between the relation of short and long term. Moving averages, normally a very, very bad sign. And there is no absolute support before we get down to 18,500. So everything, there is a huge laid up ground for a fall. But again, we are at a place where things can bounce up or continue to work hard. In all these years while I'm doing this, I've seen charts like this. Sadly, they end on the very, very wrong side. When you break all these support levels, you are not able, like last week, we're not able to push up. Usually it gets a huge drop, 1 or 2 days, major drop, like in this case, can fall to 18,500, scare the markets before it bounces up. And when it bounces up, it bounces relatively hard, but you still have established a short-term trend down. Anyway, I believe this week will be too many numbers coming in, so it will go either way. I cannot really say which way it will go. I will remain a little bit passive. I have my stocks which I will stay in. Already mentioned some of them and a few other. And you are in for a few stocks which are flagging buy signals, or in general are in trends, etc., which are good. Here are some. Broadcom is one stock. Tesla again remains in a very, very positive state. So Tesla is flagging a lot of buy signals. Lululemon Athletics Ulta Beauty, small company there, also in a very good position. Nova Limited, Organics are some of companies that are in good trends, show high probability of going up this week. One of the bigger one in the same situation is, by the way, Google. So there you have a few stocks. Tesla, Google all shows that there's a high chance of upturn this week. We will just have to see. Broadcom also in this list. Some of it, if they go the right direction, can be major good places to be in the week. Some other stocks that shows that will have a huge swing, and again, you just have to correctly assess which direction it will be. Take, for instance, a hair test system, which I also know a lot of people follow. Expected to swing minimum 8% today's trades. You can expect minimum from high to low 8% swing of the day. Meaning actually it can be as much as 16, but that is a high chance that a hair test system will end up either more than 8% or down more than 8%. And the Tilray will come tomorrow, expected to move more than 11% in either direction. And we can continue down the list. Some of them are going for less, like 3-4% is mostly for the bigger banks, by the way. So they are expected to swing anywhere from 3 to 4% on the quarter results. But in the right position, sitting in options, 3 to 4% can be quite much money. There are of course other stocks which is expected to move quite a lot. NIO is again one of these, and in just a minute we will be in the $1,000 challenge. Will the week be good for me? I'm not sure gold will move as much as it did last week, but hopefully some of the stocks that I have will do quite okay. Citigroup expected to move 4.45% up or down. I will believe that will be on Wednesday. Wells Fargo, which also will come, is expected to move 4% up and down. These numbers you can find either going to my test site at getagraph.com, or you can watch it at stockinvest.us, find the tickers, and you will see when the quarter results how much it's expected to move up or down based on historic movements along with the expectations for the quarter results. We'll try to make also a better prediction which direction it moves, because it's a very interesting thing. Try to figure out exactly which way people will put their bets after the quarter results, so you can position yourself before. On the topic of tools which you can use, so I'm developing a new tool, hope to talk more about it next week, which will analyze your watch list. So interesting, I've done a few tests now, looks quite good. But in general, just another tool trying to help you see what systems think about your stocks. In short, you will just add your stocks to a watch list, and you can evaluate the watch list with tools, systems, logics. Everything is created by us. I promised a tip, so I gave a few stock tips. Here is a tip that will save you a lot of money. Learn support. Support can be seen. I started to say about support resistance when talking about Nasdaq, Dow Jones. 19,000 points. If above 19,000 points becomes support level for Nasdaq, and when Dow Jones is under 42,000, 42,000 becomes a resistance level. Try to read more up about these things because they absolutely work, sometimes only short. Other things you will find support in, so you have the round numbers, but you also have the trend lines, and volume is the telltale of all of these things. use volume because volume will absolutely, if you see a volume peak around a certain number, you just look at the historic part of the chart and you see that volume, for instance, was very, very high around take Nasdaq, was very, very high around when the stock Nasdaq was 19,100 points. Simply mean that there's a high chance that the Nasdaq can turn at 19,100 points. Currently, Nasdaq is at 19,162 points. Many of you follow me almost blindly. You should not do that. Remember, I will not always be correct. I try to be as correct as possible, and very often I seem to be on the right end of things. But the bet into NIO is far from right, down to $4.17, bought into the $1,000 challenge at 5.1, makes for an 18.24% loss in NIO. And to make it even worse, this is just a $1,000 challenge where I started with $1,000, trying to grow it as fast as I can, and so you can follow it. Currently sitting at $2,385. So we still are on the double, but we are moving fast down. But again, I told you this is the high risk, where I will just try playing the hard ball game and grow these very fast. Not been successfully over the last 8-9 weeks at all, and NIO is absolutely done. And what I wanted to say, to make it even worse, I have a huge personal stake in NIO because I so strongly believe that EVs will have a growth period again, arguing for Tesla. And as I've been saying, I do not try to pin the exact low. I try to find where I think we are at the lower end. Then I do a few buys, trying to find a nice average and leave it. So I can easily sit personally in NIO for years to come because I believe EV will be on an upturn. On that note, across all Europe now they are talking about China is producing too much electrical vehicles. I read the Norwegian newspaper this morning and they are saying, wow, bad, China is flooding the Norwegian market with cheap electrical vehicles. But why do the politicians say that, oh, we need to go green, we need to reduce the emissions, etc. of fossil fuels, we need to get to electric, and in the same breath they say that we cannot buy cheap electric vehicles from China. I thought that maybe should be the main thing that you want, for you, the ordinary consumer, to buy as cheap as possible, because that's one of the incentives for people to change, is to buy cheap, affordable. The switch is much easier, and suddenly more people will drive EVs, and we get to that point everyone argued so strongly about 4 years ago. Go green. I think green will be on an upturn, but so far, what a disappointment. And to make it even worse, I will not sell NIO in the $1,000 challenge. China is producing tons of electric cars. They are selling more and more. NIO is doing the same. I cannot understand why it's falling. I do understand all the tariff issues with China causing the hesitant to buy into NIO. But in my world, it's very undervalued as we speak. But we just keep losing money, down 18.24%. No changes in the $1,000 challenge, still sitting in NIO. Will sit in NIO a little bit more. Eventually I will just have to take the fall in the $1,000 challenge, because I will try to grow that. Remember, we was almost at $4,000. Now we are back at $2,385. It's the slowest I've ever grown a high risk portfolio. Done a few mistakes. Human after all. That was it. That was today's podcast. We are heading into week 3. All I can do is hope that you will have a super week, that you will read up on support. Reason why I mention support now is because I expect it to be a volatile week. Very important to understand the support levels, because they may save you. If broken, you maybe should go out of your positions and wait for a better chance. Or if you are in the position where you want to buy, try to find good support levels, because that's often where stock turns and turn up, and it makes for just a better buying position. Until we see you next time, just have a beautiful week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.